Hello and welcome to HouseLux Estate, the place where we simplify complex financial concepts. Our mission at HouseLux Estate is to provide you with valuable financial information in a way that's easy to understand. We believe that everyone should have access to the knowledge they need to navigate the financial world, and we're here to guide you every step of the way. Today, we're diving into the world of Forex trading, a crucial component of today's global market. Whether you're an experienced trader looking to diversify your portfolio or a beginner just starting your journey, understanding Forex trading can open up a world of opportunities. We'll break down the basics, show you how it works, and give you some tips to get started. So whether you're looking to expand your financial knowledge or simply curious about the world of Forex trading, you're in the right place. If you find our content valuable, make sure to hit the subscribe button and turn on the notifications so you never miss an update. So what exactly is Forex trading? Let's break it down. Forex trading, in the simplest terms, is the buying and selling of currencies. Imagine it as a marketplace where you can exchange one currency for another. But instead of trading apples for oranges, you're trading dollars for euros or yen for pounds. The aim is to buy a currency when its value is low and sell it when its value rises, making a profit from the difference. Currency trading revolves around currency pairs. This concept might sound a bit complex, but it's quite straightforward. Each Forex trade involves two currencies, one that you're buying and one that you're selling. These are known as a currency pair. For example, if you're trading the US dollar against the euro, the pair would be represented as USD/EUR. Now, the first currency listed in the pair, the US dollar in our example, is known as the base currency. The second one, the euro here, is referred to as the quote currency. When you see a Forex quote, it tells you the value of the base currency in relation to the quote currency. So if the USD/EUR is quoted at 1.2, it means that one US dollar is equivalent to 1.2 euros. But how do you make money from this? Well, the value of these currency pairs fluctuates constantly due to numerous factors, such as economic indicators, geopolitical events, and market sentiment. As a trader, you aim to predict these fluctuations and make trades accordingly. If you believe the value of the base currency will rise against the quote currency, you buy the pair. Conversely, if you think it will fall, you sell the pair. Forex trading can seem a bit intimidating at first, but once you understand the basics, it becomes much more manageable. Remember, it's all about buying low and selling high, and with the right strategy and a keen eye on the markets, you can potentially reap significant profits. Now that you have a basic understanding of what Forex trading is, we can delve deeper into how it works. All Forex trading might seem complicated, but once you understand its mechanics, it's quite straightforward. Forex trading, in its most basic form, is the buying and selling of currencies. Traders aim to profit from the fluctuations in exchange rates between different pairs of currencies, like the euro and the US dollar. But how does this all work? Well, it's all about market analysis. Traders use two main types of market analysis, fundamental and technical. Fundamental analysis involves looking at the larger economic picture, considering factors like inflation rates, political events, and economic policies that can influence a country's currency value. On the other hand, technical analysis focuses on patterns within price charts to predict future movements. A key concept in Forex trading is the PIP, or percentage in point. This is the smallest price move that a given exchange rate can make. For example, if the EUR/USD pair moves from 1.1200 to 1.1201, that's a 1 pip increase. Traders make profits from these small changes in exchange rates. Another important concept is leverage. Leverage allows traders to trade larger amounts than they have in their account. For instance, with a leverage of 100 to 1, you can trade $100 for every $1 in your account. This can increase potential profits, but remember, it can also amplify losses. Forex trading is carried out in lots, with the standard lot size being 100,000 units of the base currency. However, there are also mini, micro, and nano lots, which are smaller and allow for more flexibility in trading. The actual trading happens through a Forex broker. These brokers provide trading platforms where you can execute your trades, and they earn through spreads, which is the difference between the buy and sell price of a currency pair. With this knowledge, you're one step closer to becoming a successful Forex trader. Ready to get started with Forex trading? Here are the steps you need to follow. First and foremost, you need to choose a reliable broker. This is a critical step, as your broker will be your gateway to the Forex market. Look for a broker that is regulated by a reputable authority, offers competitive spreads, and has a user-friendly trading platform. Do your due diligence and research various brokers before making your decision. Once you've chosen your broker, the next step is to set up a trading account. This process is usually straightforward. You'll need to provide some personal information and financial details, and it's very important to ensure that all of this information is accurate and up to date. After setting up your account, it's time to fund it. The amount of money you deposit into your account is entirely up to you, but as a beginner, it's advisable to start with a small amount until you get the hang of trading. Many brokers offer the option to practice with a demo account before you start trading with real money, which can be a great way to learn the ropes. Next, you'll need to familiarize yourself with the trading platform. Spend some time exploring the various tools and features available to you. Learn how to analyze Forex charts and how to place trades. This knowledge will be invaluable when you start trading. Finally, it's time to make your first trade. Start with a currency pair that you're familiar with, and remember to start small. It's a good idea to have a trading plan in place before you start trading, which should include your trading goals, risk tolerance, and strategies. And there you have it. You're now ready to dive into the world of Forex trading. Remember, Forex trading can be risky, and it's important to only invest money that you can afford to lose. But with careful planning, disciplined trading, and continuous learning, you can make the most of the opportunities that Forex trading offers. Before we wrap up, here are some tips to help you succeed in Forex trading. Firstly, never underestimate the power of continuous learning. The global economy is a dynamic entity, constantly shifting and evolving. To stay ahead of the curve, you need to be a diligent student of the market. Read financial news, study market trends, and understand economic indicators. Investing in your knowledge will pay dividends in your trading performance. Secondly, practice makes perfect. Most Forex trading platforms offer a demo account feature. This is a fantastic tool for beginners. A demo account allows you to trade with virtual money, giving you the freedom to learn and make mistakes without any real financial risk. Use this tool to familiarize yourself with the platform, develop your trading strategy, and build confidence in your decision-making abilities. Thirdly, effective risk management is critical. Forex trading can be volatile and unpredictable. Therefore, it's essential to have a plan in place to manage potential losses. Set a stop-loss limit to protect your capital and never invest more than you can afford to lose. Diversify your portfolio to spread the risk, and remember, high risk does not always mean high reward. Moreover, emotional control is just as important as technical knowledge. Trading can be a roller coaster of highs and lows, and it's easy to get swept up in the excitement. However, successful traders are those who can maintain a cool head, even in the heat of the moment. Avoid impulsive decisions and always stick to your trading plan. Lastly, remember to be patient. Forex trading is not a get-rich-quick scheme. It takes time to learn, to practice, and to develop a profitable trading strategy. Don't be discouraged by initial losses or slow progress. Instead, view these as learning opportunities and stepping stones towards your future success. Remember, success in Forex trading doesn't happen overnight. It requires patience, dedication, and continuous learning. And that's a wrap on our beginner's guide to Forex trading. We've journeyed together from the very basics, unpacking the world of foreign exchange markets, to the nitty-gritty of how Forex trading actually works. We then took those first steps on the path of starting your own Forex trading venture and armed you with some essential tips to help you succeed in this fast-paced financial world. Remember, the key to successful Forex trading lies in understanding the market trends, making informed decisions, and never shying away from learning opportunities. It's a journey of constant growth, and we're here to guide you every step of the way. Thank you for joining us today on House Lux Estate. If you enjoyed this video and found it helpful, please give it a thumbs up, share it with your friends, and don't forget to subscribe to our channel for more financial insights. Until next time, happy trading!